Effective with the end of this calendar year, we will have full repeal of the Michigan business tax. The replacement tax, a corporate income tax, or CIT, will apply starting January 1st of 2012 and will apply only to entities that are taxed as C corporations for federal income tax purposes. Therefore, entities that are flow-through entities will not have a specific entity-level tax on business income. Ultimately, the income of those flow-through entities will be taxable to the owner, whether it's a C corporation owner or an individual or trust owner of that pass-through entity. Somewhat new for the corporate income tax provisions is a new nexus threshold for corporate members and corporate shareholders of entities that on their own have no Michigan activity but are considered to be beneficial owners of a flow-through entity that conducts activity within Michigan. There may be a nexus threshold met and a filing requirement to comply with. In addition to the MBT expiring at the end of this calendar year, any MBT NOLs will also expire with the end of the calendar year. Any unused MBT NOLs will not carry over to the corporate income tax regime.
Rachel, what about losses incurred under the corporate income tax?
So when the department enacted the new CIT, it was clear they wanted a clean slate, no carryover of the MBT NOLs, but any NOLs generated under the corporate income tax provisions will have a 10-year carryover period. For entities that issue financial statements that would have recorded either a one-time deferred tax asset for the enactment of the MBT or have potential deferred tax assets or liabilities recorded related to gross receipts, those will need to be adjusted off the financial statements for this tax year. For taxpayers that are corporations that will be subject to tax under the CIT, they will need to reevaluate any deferred tax assets or liabilities under the corporate income tax. But effectively, flow-through entities with deferred tax assets or liabilities, those will need to be adjusted completely off the financial statements. In addition, because the MBT NOLs expire at the end of the calendar year, any deferred tax asset related to an MBT NOL will also need to be adjusted off of the financial statements. Along with the corporate income tax provisions, the withholding provisions for Michigan income tax have been expanded. If an entity is set up in a tiered structure with a lower tier flowing up to an upper tier entity, there will be required income tax withholding of 6% regardless for the tax status of the ultimate owner. So even though the income might flow through multiple partnerships and out to an individual who would otherwise pay tax at a lower rate, the income tax withholding requirement is still the same 6%. In addition, there is the potential that if the owner of a flow-through entity is a tax-exempt entity, at least the way the rules were currently drafted, that 6% withholding rate will continue to apply. The department realizes that there are some nuances in this that will need to be cleaned up, and we're hoping to see technical corrections on this shortly. Lastly, the only credit that's being retained under the corporate income tax is the small business credit. Any specifically lobbied for credits that were in place for MBT, all the special interest credits, those will all go away going into 2012. And the only credit, again, is the small business credit. With that, I'll let Curtis talk about some transition and planning items.
So with this year of transition from the MBT at the end of this year to the corporate income tax beginning in 2012, there's greater heightened importance on tax planning, not just from the potential of deferral of tax, but potentially permanent savings. So first item that we'd like to touch on is fiscal year taxpayers. Fiscal year taxpayers will actually have 2 Michigan tax periods or tax returns required within their federal year that ends in 2012. The first beginning with the beginning of their federal year through 12/31, and then another that begins January 1st through the end of their federal year. Again, this will require 2 tax returns for these fiscal year filers. For fiscal year filers, they will have the option of computing their tax for those respective periods based on actual activity for each respective period, or using a prorated method based on the number of months in the short period divided by 12. The addition of the movement from MBT to the CIT will provide planning opportunities with regards to timing of income and deductions, with kind of the general back to traditional planning of deferring income and accelerating deductions. So for instance, if you have a situation where you're looking at sale of a business or other major transaction, by deferring that transaction until 2012, you would be able to avoid the MBT gross receipts tax. You could also do this similar in terms of executing a sale, but doing it on an installment basis, again, to avoid that gross receipts tax. Lastly, with regards to deferral of deductions, there are certain items that will be allowed as an offset to your tax base for 2011 that will no longer apply in 2012. So again, going back to the gross receipts tax, there's a deduction for purchase from other firms for asset acquisitions. That will not apply in 2012, so you may want to look at accelerating an asset purchase in order to reduce your last MBT gross receipts tax. In addition, payment of winter 2011 industrial personal property tax. So under the MBT, there's a 35% refundable credit for industrial personal property tax will not apply under the corporate income tax. So by paying your winter 2011 industrial personal property tax by 12/31, you'll permanently save 35% on that amount paid that you otherwise wouldn't receive under the corporate tax.
Curtis, when the MBT was enacted, there was a reduction in the millage rate applicable to personal property. Do you expect this to continue to apply?
Yes, so under the MBT, when that was enacted, part of that reform allowed a 24 mil reduction on industrial personal property and a 12 mil reduction on commercial. Those will continue to apply going forward. It's just the refundable personal property tax credit under the MBT that will no longer apply. In addition, there's considerations for entity selection, whether a C corporation should elect S status or other flow-through treatment and vice versa. So on the very surface, it would be a matter of looking at the tax rate, 6% under the corporate income tax and 4.35% under the individual. However, there are differences in the tax-based computation between the two taxes, as well as how income or sales are sourced to Michigan. They can result in dramatically different amounts of taxable income sourced to the state that would potentially outweigh the tax rate differential between 6% and 4.35%. Planning for estimated tax payments. So 2011 being the last MBT year, flow-through entities no longer being subject to a direct business tax in 2012 will want to monitor their last 2011 estimates to not significantly overpay. We have seen situations with the Department of Treasury and significant delays in getting refund checks. So you'll want to just again monitor so that a flow-through entity isn't significantly overpaid come the end of the year. And then for 2012, C corporations and making estimates under the new corporate income tax will not be able to avail themselves of a prior year safe harbor and will be required to make estimates based on 85% of the actual liability for 2012. And then lastly, certificate credit holders, those that have mega credits or brownfield credits or films credits, will need to make a decision in 2012 of whether to elect into the MBT in order to claim the full value of those credits. And then lastly, personal property tax reform. So the governor's administration has indicated a strong desire to revamp and potentially repeal the personal property tax in Michigan. We'll have a better idea of the framework of what that proposal will look like by the end of the year, but some of the things that we're hearing coming out of Lansing would include a more accelerated repeal or reduction for industrial personal property, followed by commercial, and then lastly for utility personal property. In addition, we're hearing of a potential for a small taxpayer filing threshold. For instance, potentially a filing threshold of $40,000 less of taxable value of personal property. Such owners wouldn't be required to file a personal property tax return. That filing threshold will eliminate 80% of the filers from having to comply with personal property tax. And that wraps up our Michigan update.